Hey, it's Clay Trader, and this will be a video chart on ticker symbol PLX. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like you this time frame. I think that's a good job of telling the quote-unquote story of the price. And in this situation makes mapping out a very logical question quite straightforward. And that question revolves around the fact that today was, without question, the bulls had a very nice bounce. I mean, when you consider where the price was down at its low points to where it ultimately closed, I would say that any rational person would say, yeah, the bulls actually did make a very, very nice bounce. And this is what leads us to the very logical question of, is there any sort of true power behind this bounce? Is there any sort of genuine strength? Or is this just some sort of knee-jerk reaction dead cat bounce? I have no idea, but like I said, by using a chart, we can make answering that question very straightforward. And in my mind, it all revolves around a single area, and that area is down here at 57 cents. Why is 57 cents so important? Well, hopefully we can all agree on the logic that a bounce that's a truly strong bounce is going to keep on bouncing. Or in other words, the price is going to keep on making progress forward. I'm assuming you're saying, hey, thanks, Captain Obvious. Of course, if a bounce is truly strong, it's going to keep making progress forward and not go back to where it was, because that would be a contradiction. Exactly. So with that in mind, think about 57 cents. Any sort of closes below it, or worse yet, if the price separates to the downside, what would that be doing to the price at that point in time? That would literally be putting the price right back inside of this range where the price was, when it was down around the low portions of the day. Again, going back, not a sign of true strength. Whereas let's say something like this happens, price goes sideways and then heads back up. What would you have in this situation? Well, you'd have a set of lows right here. You'd have this previous set of lows down there. If you picture each one of those as stair steps, well, hey, now you have stair steps progressing in the upwards direction. And again, that's what a truly strong price movement is going to do. It's going to make progress forward. And in this case, I'm just defining and quantifying the statement, make progress, as 57 cents. As far as levels of resistance are concerned, really all about the purple line right now at this point in time, which is the 50-period simple moving average. But in my opinion, breaking areas of resistance, not a huge priority. Top priority for the chart right now is just go through healthy consolidation and build higher bases, because as long as higher bases are being built over time, the chart will take care of itself. So no doubt about it, nice bounce on the bulls part today. Now things transition to the question of, can they build upon the bounce? We shall see. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.